All right, so guys, Jeff here. Today's Wednesday, I think. Yeah, Wednesday. And there's not a lot of news actually, but there's a lot of earnings that actually happened yesterday. So we had Microsoft earnings, we had Google Alphabet earnings, we had General Motors earnings, we had Enphase earnings, which was quite interesting. So let's get into the more important earnings. I actually went through the earnings this morning because I didn't really stay up last night. I was really, really tired. I fell asleep at about 4 a.m. As the market closed, I just fell asleep. I did not really look through the earnings. But afterwards, I did go through some of the Microsoft earnings and some of Google's earnings. Sad to say, Google did miss on EPS. I think they missed about $1 on EPS. Top down, and top line, bottom line, they did miss, but they did beat on ad revenue. As for Microsoft, on the other hand, very, very surprising. Well, not really surprising. I did think that Microsoft would definitely be beating their estimates for this current earning quarter. For Microsoft, I think they beat EPS by about close to $1. Top line, bottom line revenue of them were all beats, so pretty good for Microsoft. And even then, Microsoft is also talking about how they will most likely be having a better quarter next quarter, which is even better for Microsoft. I do have a few shares of Microsoft and also call options on Microsoft as well. So very, very excited to see what's going on over there. However, there's something more concerning besides the earnings and such, because yesterday I recorded a video quite late at night. I think it was about like 11 or 12 a.m. Well, 11 p.m. or 12 a.m. And it was basically because the whole entire market was going red. And even now, it's still kind of showing a lot of red. Okay, so the SPY is at $417, which is scary because we have already went down below the threshold of the 420, which was actually a very, very strong support line, whether you like it or not. It was a very strong support line. Right now, it's actually down to 417.5. What I am afraid of is my next support line is at $414. If we actually cross that line, that would have really increased the possibility of us actually getting into a recession state. And we are very, very close to that already, as it is. From what I understand, let me open up my SPY to actually see. The last time we actually hit to that low was during, let's see. Okay, the last time the SPY went down that low was on the day of the war. Yeah, on the day of the war, where the war started, which was on the 24th of February. That was the last time the SPY was this low. And the last time the SPY was this low again was in June of 2021, which was when Delta was first realized, which is, of course, at that time, prices went down a little bit. But, of course, after Delta happened, with the whole Omicron, with the whole reopening, with the whole infrastructure plan and things like that, everything started to open up again. So people started to not really worry as much for the SPY, which is why the SPY actually went up all the way to $478 high. Okay, right now we're talking about $414 or so. That's where the real concern is at the moment. But of course, if you're talking about back to pandemic lows, then we actually look at even lower prices. We're looking at back to March of 2020, we were at about $200 or so. Okay, but of course, I do think that we're not back to pandemic lows, of course. Pandemic lows was actually not very. I don't really think that is a very likely scenario for us to really reach there. But right now we are very worried because in the bigger scheme of things, it does look like we're actually entering a little bit of a recession cycle, which is why hence the video that I actually made. I uploaded it I think this afternoon. I think at about 12 or 1 p.m. I forgot about that. But yeah, I kind of basically explained about the risk that was in the market and the kind of my concerns for it, especially with Tesla. Tesla actually went down 12% yesterday, which was horrible. Even right now in the pre-market, it's barely recovering 1% at 0.7% only. So pretty bad for Tesla as well. But of course, for Tesla, it was basically due to the whole Elon Musk buying over Twitter, and then his financing plan was basically to put Tesla on a margin sector for him to actually buy over Twitter, the whole financing plan and such, which is why Tesla kind of went down, which I kind of don't know why either. But I'm not going to lie, Tesla is starting to look really juicy right now because this is a really good price for people who wanted to get into Tesla, and now you can kind of get into Tesla. For myself, I really want to get into Tesla, but I don't think I want to get into margin to get into Tesla right now. So, yeah, I'll see how it goes for now. But anyway, a little bit late for this, but let's go to the news today. All right, so I talk about the tech earnings. I think that's fair enough. Let's look at this, which is Elon Musk bets Twitter user will like a more freewheeling platform. I think that, honestly speaking, I feel that we have been talking about this whole Twitter situation for a very, very long time. And it all kind of started out with, as a joke for how Elon Musk wanted to have, Elon Musk wanted to buy over this platform and such. And it started kind of like a joke where he just want to buy over to get rid of all the spam bots, want to make sure that he can authenticate every living human being who is using Twitter account and such, cool and such. But after which, of course, things did change a little bit. And, right now it's actually a very serious thing. And even right now, I think that we also had some talks that even the EU regulators are also coming in to stop it, which is over here. We can actually, over here. You can see, let's see, where is it? Its influence way beyond its user base and way beyond its valuation, and so we care about it, which is the former UN special rapporteur focused on free speech and now a law professor in University of California, blah, blah, blah. Okay, so he said over, where was it? I read it earlier. Okay, so their efforts target a range of potentially problematic content, from hate speech and false information about elections to what they see as fringe views on health, along with other issues the platforms consider harmful. Pinterest recently banned posts that it deems to contain misinformation about climate change and such. So they're talking a lot about free speech situation. But of course, the big question that a lot of people are asking that, because right now, if Elon Musk is the new CEO of Twitter, is Donald Trump going to come back? Which I think Donald Trump actually did come out to say that he's not. Many in Trump camp have voiced support for Mr. Musk's planned Twitter acquisition, though Mr. Trump told Fox News on Monday that he doesn't plan to return to the platform and would instead use his social media startup, the Truth Social. But of course, even then, the Truth Social did not really go up in price, even though that happened. Okay, well, it did a little bit. The Truth Social is at about $41 or so. So yeah, it kind of worked out a little bit. But yeah, this is a great, great day. The Trump ally and former GOP congressman said finally we are getting some movement in the right direction here in terms of opening the internet back up and giving people their voice back. So yeah, I do think that, for the people who are in the far right, the people in the far left do think that, free speech is a very, very important thing. People in the far right think that, it to a certain extent is still important. But, you would have to actually kind of limit a little bit of the free speech, which clearly Elon Musk's view on that is, if you're limiting anything about free speech, it's not free speech anymore. So yeah, that's the whole paradigm that you want to really talk about on the other side of things. So yeah, anyway, on this side of things, I think that this would be a nice end to this whole entire Twitter acquisition talk. But I do think that we'll most likely have more things happening in the future for this. But anyway, let's move on to other news, even though there's not much today. Russia to cut gas to Poland and Bulgaria, making energy a weapon. So for people who didn't know, first of all, Russia actually made the gas and the oil that they are going to be exporting out to the other countries to only be dealt with via rubles. After the new decree came out. So yeah, it's cool. You can do it as only paid for in rubles. But afterwards, people are worried that if this were to happen, this will actually weaken the other currency elsewhere. But of course, to some extent, people actually didn't really care because people wanted the oil and the gas over to their countries and such. But right now, what Russia is actually doing is cutting the gas to Poland and Bulgaria. So what this actually creates is more geopolitical tensions between EU countries and also Russia. But of course, for EU countries, they're also starting to have a little bit more dependence on other sources of oil and other sources of gas. So that's all good, okay? But at the same time, even though they have more dependence on via other outlet, at the same time they still kind of do require Russia to have the same, to a certain extent, the same level of gas export over to the EU countries. So ultimately, I would still think that Russia will still be a very, very big part for EU in terms of their gas export and their oil export. So of course, clearly, the European countries are calling this that Russia basically making energy a weapon, because of course without energy, horrible stuff can happen. But of course, even from yesterday's news as well, we were talking about nuclear risk and such. I do feel that there's a possibility that Putin is actually holding this as one of the card that he's going to be playing against Ukraine. If you give us Kharkiv and you give us the eastern Donbas area, we will give the gas back to Poland and Bulgaria. In a sense, okay. Russia is kind of playing it so that EU would kind of talk to Ukraine to kind of allow Ukraine to be like, hey man, just give up Kharkiv, that kind of thing. I'm not sure how that's going to be working out, but yes, this is going to be a huge issue because the longer Poland and Bulgaria do not have oil, the higher oil prices are going to go up. Even right now, I'm looking at Occidental Petroleum, which that's kind of how I look at oil prices, although that's not supposed to be the case. For Occidental Petroleum at the moment, they are already up about 1% in the pre-market, but I don't know how that actually work out. But ultimately, if the market continues to tank, there is a good chance that Occidental Petroleum would actually go down as well. All right, anyway, let's talk about this. Stock market meltdown have FAANGs looking increasingly toothless. So I'm pretty sure that we all know about FAANG, okay? F is for Facebook, which will be getting the earnings report tomorrow. A is for Apple, which will be getting their earnings report very, very soon, I think in this week. A is for Amazon, which will be getting their earnings report, I think, next week. N is for Netflix, that actually reported 40% down in the quarter. Well, in one day, actually. And G is for Google, Alphabet, which also reported earnings yesterday and kind of missed. Google is also down by, I think, 4%, which was quite bad for Google. So yeah, FAANGs are not actually doing that great. If anything, non-FAANGs are actually doing a lot better. And I think that that's kind of where all the recession talks actually come in as well. Because when you're actually talking about recession talks, okay, I would like to think that a recession happens when we have bad earnings as a whole. Okay, that's kind of how the catalyst kind of works out for a recession. Okay, when horrible things happen, bad earnings, people are not spending money. However, things are going up in price, inflation is strong, interest rates are high, and people are just not spending money. That's what it causes a recession. But how I'm looking at it right now, earnings as a whole, okay, are doing actually surprisingly well. Okay, we are not supposed to be seeing beats in earning for this whole entire quarter, honestly speaking. Of course, which for the banks, okay, other than Deutsche Bank, every other banks are actually losing, be it your HSBC, your Citigroup, your Credit Suisse, your Morgan Stanley, Goldman Sachs, JP Morgan, all of them are actually down on profits this quarter, other than Deutsche Bank. Okay, but if you're actually talking about banks alone, banks actually set the precedent for what is going to be happening for the next for the current quarter, which is why banks usually start with the earnings season. And for banks, we kind of really expected that this quarter is going to be horrible because that's where the pullback actually happened from the sudden spike up that we have post-pandemic, the moment the pandemic hit, and then the recovery immediately came in after all the money came out. And then right now it's just trying to kind of calm down the whole wave and kind of find a strong balance. So it's kind of scary because the thing is that right now you're seeing that prices of earnings are actually doing well, but why is the QQQ down? Okay, the QQQ was down 4%. Okay, the SPY was down 3%. It's horrible. Okay, and right now the worst part is that there isn't any obvious catalyst. Okay, when Jerome Powell talked about the possible 50 basis point hike, that we can consider that as a catalyst. We can consider that 2 days of catalyst. Fine. Okay, the market is going to price that in. But there is almost no reason for us to see the SPY continue going down. There's no reason for us to see the QQQ going down, which is kind of weird. Okay, in this market, it's kind of weird. So if we are talking about how, if maybe there's a recession, maybe there's a recession, but if there is a recession, end-phase shouldn't be destroying earnings. Okay, Microsoft should not be hitting earnings either. Okay, there's a lot of companies that should not be beating estimates. If that's the case, if we are treating that the whole entire US economy is going to crash, we're getting into a recessionary trend. Okay, earnings should be a complete, like 95% of earnings should completely fail out. Okay, there shouldn't be any beats. There shouldn't be any earning beats if that's the case. And even if that were to be the case, it would still be easy for people to earn money, because if that were to be the case, everyone's going to be buying puts. Okay, but that's clearly not the case. People are not making easy money because I'm not sure if it's going to be an obvious lose. Okay, even for end-phase, I was talking about end-phase yesterday as well. I was talking about how end-phase, if they actually miss on earning, $120 would be a good buying opportunity for myself. Okay, but end-phase suddenly out of nowhere shows us a great beat, and they actually went up 8%. Okay, yesterday in the after hours, they actually went up almost 10% as well. So end-phase, pretty good company. I was saying that if end-phase beat on earnings, chances are they're going to go towards the 170, 180, which they did. Right now, they're at about $166 in the pre-market, which is about a little bit lower than the price target I actually have for them beating on their estimates. So, kind of missed out my chance to buy into end-phase, not gonna lie. But of course, like I said before, okay, this kind of companies should not be beating on earnings. They should not beat the estimates, because it doesn't make sense if we're talking about a recessionary trend. But right now, I'm kind of stuck. Okay, I'm not sure if we are really getting into a recessionary trend. So of course, I do think that the next few earnings that's going to be really, really important would definitely be Apple. I think Apple is going to show us supply chain concerns, China situation, and also consumer spending. I think Apple is a very, very important company to look at earnings for these three things. Next up will be Facebook. Facebook is very, very important. Again, same thing, is for us to look at ad spending, because that's where people spend most of their ads money. Facebook and Google AdSense, basically. So Facebook is going to be a very, very important one for us to look at. Afterwards, we want to look at Facebook metaverse investment into R&D. That's going to be a huge one as well. And afterwards, we have to also look at monthly active user and daily active user for Facebook. Okay, for Meta platform, it's going to be important because it's not only just going to be Facebook, it's going to be Instagram, it's going to be WhatsApp. Okay, these are going to be important for Meta platforms because this will actually let us see the amount of recovery that is happening back into the society again. Okay, the more daily active user simply means that the world is not really recovering as well, because people are still constantly on their phone using Facebook, even though people are going to go back into the office, but chances are people are going to be using less of the platform itself. So I do think that Facebook is going to be showing us that kind of information. Up next is going to be Amazon. Amazon is going to be important because Amazon is going to show us consumer spending. And also the next one, which is the most important one for me, which is logistics. Okay, UPS have already did their earnings, and I thought that UPS is actually doing quite well. But for Amazon, right now, Amazon is actually thinking that they might just start to use FedEx and UPS to do a lot of the deliveries, so they can actually just split them up to actually let the other delivery logistic companies actually handle Amazon Prime packages and such. Okay, that's pretty smart, delegating some of their resources for their ongoing businesses and such. But I do think that for Amazon, it's going to be very important for us to really look at consumer spending, because a lot of people spend money on Amazon. You'll be surprised. Okay, next up, we have to look at logistics. Okay, next up, we also have to look at what Netflix actually created for Amazon Prime, because with the amount of people that's getting out of Netflix, people are getting into your HBO, your Disney Plus, people are getting into your Amazon Prime, people are getting your Crunchyroll, whatever it is, other platforms outside of it. Okay, so that's going to be very important for us to really look at what is happening with the entertainment side of things. So yeah, I think that these three companies, the reason why FAANG is FAANG, and the reason why we actually need to look at FAANG so importantly is because of all these natural catalysts that's going to be coming out from their earnings report itself. But anyway, yeah, that's kind of all I have for today. Kind of excited for today's earning, but anyway, I have to go and prepare my dinner and I want to rest a little bit. But thank you guys so much for watching, and I'll see you guys tomorrow. Bye.